Taxation can apply to a variety of entities and individuals, each subject to different types of taxes based on their specific circumstances. Here's a detailed explanation of who is subject to taxation. 1. Individuals. A. Residents. Income tax. Residents of a country are typically subject to income tax on their worldwide income. This includes wages, salaries, bonuses, interest, dividends, rental income, and capital gains. Property tax. Individuals who own property may be subject to property taxes based on the value of their real estate. Sales tax. When purchasing goods and services, individuals pay sales tax, which is often included in the purchase price. Wealth tax. Some countries impose taxes on individuals' net wealth, including assets like real estate, stocks, and savings. B. Non-residents. Income tax. Non-residents are usually taxed only on income earned within the taxing jurisdiction. This includes wages for work performed in the country, rental income from properties within the country, and business income generated within the country. Withholding tax. Certain types of income paid to non-residents, such as dividends, interest, and royalties, are subject to withholding tax, where the payer deducts tax at source before the payment is made. Corporations. A. Domestic corporations. Corporate income tax. Corporations incorporated in a country are subject to tax on their worldwide income. This includes revenue from sales, services, and investments, minus allowable expenses. Property tax. Corporations that own property are subject to property taxes based on the value of their real estate holdings. Sales tax, VAT. Corporations collect sales tax or value-added tax, VAT, from customers on taxable sales of goods and services and remit it to the government. Excise tax. Corporations producing or selling specific goods, e.g. alcohol, tobacco, fuel, may be subject to excise taxes. B. Foreign corporations. Income tax. Foreign corporations are taxed on income derived from their operations within the taxing jurisdiction. This includes income from branches, subsidiaries, or permanent establishments. Withholding tax. Payments to foreign corporations, such as dividends, interest, and royalties, may be subject to withholding tax. Branch profits tax. In some jurisdictions, foreign corporations operating through branches may face additional taxes on branch profits. 3. Businesses. Partnerships. Partnerships typically do not pay taxes at the entity level. Instead, income is passed through to the partners, who report it on their individual tax returns. Sole proprietorships. Sole proprietors report business income and expenses on their personal tax returns and pay taxes accordingly. Limited liability companies, LLCs. Depending on the jurisdiction and the election made by the LLC, it may be taxed as a sole proprietorship, partnership, or corporation. 4. Trusts and estates. Trusts. Trusts may be subject to income tax on income retained within the trust. Beneficiaries are taxed on distributions they receive from the trust. Estates. Estates are subject to estate taxes on the transfer of assets upon death. Beneficiaries may also face inheritance taxes depending on the jurisdiction. 5. Nonprofit organizations. Exempt status. Nonprofit organizations, such as charities and religious institutions, may be exempt from income tax. However, they may still be subject to other taxes, such as payroll taxes for their employees and property taxes on real estate. Unrelated business income tax. If a nonprofit engages in business activities unrelated to its primary mission, it may be subject to UBEAT on the income from those activities. 6. Employees and employers. Payroll taxes. Employers withhold income tax, Social Security contributions, and other payroll taxes from employees' wages and remit them to the government. Employers also pay payroll taxes on behalf of their employees. Self-employment tax. Self-employed individuals pay self-employment tax, which covers Social Security and Medicare contributions. 7. Investors. Capital gains tax. Investors pay taxes on the profit from the sale of assets, such as stocks, bonds, and real estate. The rate may differ for short-term versus long-term capital gains. Dividend tax. Investors receiving dividends from stocks are subject to dividend taxes, which can be qualified, lower rate, or ordinary, higher rate, depending on the holding period and other factors. 8. Importers and exporters. Customs duties. Importers pay customs duties on goods brought into the country. These duties vary based on the type of goods and their country of origin. Excise taxes. Certain imported goods such as alcohol, tobacco, and luxury items may also be subject to excise taxes. Value-added tax, goods and services tax, T. In some jurisdictions, importers pay VAT or GST on imported goods, which may be reclaimable if the goods are used in taxable business activities. 9. Consumers, sales tax. Consumers pay sales tax on the purchase of goods and services. The rate and applicability of sales tax vary by jurisdiction and type of product or service. Excise tax. Consumers indirectly pay excise taxes on certain products, such as fuel, tobacco, and alcohol, which are included in the purchase price. 10. Foreign entities and individuals. Tax treaties. Foreign entities and individuals may benefit from tax treaties between their home country and the country where they earn income, which can reduce or eliminate double taxation. Non-resident taxation. Specific rules apply to non-residents regarding the types of income subject to tax, exemptions, and applicable rates. In summary, taxation applies to a wide range of entities and individuals, each subject to different tax rules and obligations based on their income sources, residency status, business structure, and activities. Understanding these distinctions is crucial for compliance and effective tax planning.